What's up, everybody? Happy Friday. This is week 6, the ending of week 6. So let's do a video of this past week's trades. Excuse me if I sound terrible. I'm a little under the weather. So I ask that you bear with me. Let's get started. First and foremost, let me say that these are not recommendations to buy or sell any security. This is just strictly info. Let's look at the first trade that I took this week. It was on Amazon. And remember, when I put my cursor on the bar, look at this box here. I got a sell signal on Tuesday. But I figured that the market was going to trade up the following morning. So I waited to get in until the next morning. So on Wednesday morning, I got into a trade on Amazon, playing for it to go down. Remember, you can make money when the stock goes up. You can make money when the stock goes down. These are the contracts that you can buy and sell to make or lose money when the stock goes up or down. The contracts that you purchase betting on a stock to go up are called calls, which are these contracts here. And the puts are the names of the contracts that you can purchase when you're betting for it to go down. This over here are the strike prices. These are the prices in which you can bet and speculate where the price of Amazon is going. You see they have 2055, 2067. On the put side, you have the same. These are all strikes. So wherever the stock closes, let's see, on Wednesday it closed at 2049. So I got in the next morning, and I got in at the 2040 put contract. So I was speculating that Amazon would go towards 2040 by expiration, which is every Friday. Expiration is every Friday. So what happened? Let's see. If I click on the chart, it gives you the chart here. So that morning, this is the daily chart. Every bar represents 1 day of trading. So I got in this contract. Let's see. These are the trades for the week. You can see I purchased the Amazon 2040 at $773. I was in one contract, so I had $773 at risk. The next morning, well, that morning, not probably maybe even 20, 30 minutes later, I sold out of it at a profit of $1,300. So minus what I risked, I profited $520 on this trade. It went as high that day. It went as high as $2,100. You can see the high, the low, and where it opened at. And you look at the close. That day it closed at $1,485. So even if I would have held it to the end of the day, I still would have been up. But I got out of it, took the profit, and moved on to the next trade. So again, Amazon, I waited for this bar. I waited for the open bar, waited for it to trade at the open. And that's when I purchased my contract, the 2040 put. I was planning for Amazon to go towards 2040. And on that day, it actually went below that. It went to 2032. That's why it hit that high of $2,100. Now, Amazon's contracts are very expensive, as you can see. typically I'll wait till, I get the price around something I'm feeling comfortable with. But if I figure that I have a high probability trade, I will take the risk. You know what I mean? So, and I'm still within the bounds of my money management principles. So don't look at that $773 that I risked as, oh, wow, that's a lot. No, it's not. I was still within my parameters, what I felt comfortable with. So let's move on to the next trade. Excuse me. Let's go with the Qs. I got a trade yesterday at the close, a sell signal, meaning I was playing for the Qs to go down. So therefore, I'm looking at the put contracts. Remember, puts mean you're betting for it to go down. So it closed at 230. I actually bought the 230 strike, meaning my bet was that the QQQ would go below 230 for me to make a profit. And this is expiration day, so it had to make the move today. It went as low as 228.54. That contract went up in value. It hit a high of 161, and I got out at 154 with 100% profit. You can see here my risk, $77. It's a buy. That BOT means bought. And then I sold it at 154. Now I got back into an Amazon position yesterday as well, playing for Amazon to trade down to 220. Sorry, to 2020. This is the contract that I was in, the 2020 put contract. Amazon yesterday at the closed at 2050. So I wanted it to go down $30 to make money. As you see here on today's bar, it traded up against my position. In fact, I don't even think the position went up in value. I only paid $125 for this contract. So I only had $125 at risk. And you can see here, I lost the whole entire position. So the first Amazon trade was a winner, at $520 profit. The Q was a $70 profit. And the Amazon trade was $125. It expired worthless. So let's look and see what my equity curve is looking like. All right, you can see here last week, in the last video I did, my net P&L, I was down $800 and something. Based on those two wins, this is what my equity curve looks like. Look at this box when I put the cursor in. You see I was down 842. That Amazon trade took me down to just 322. The $125 losses that got me a negative 447. And with the Q trade, I'm down negative 370. So after 12 trades, I'm still down net $371. Now, my win percentage is at 33%. And I can't remember what my payoff ratio was in the negative. But I'll explain the importance of these. These numbers here are the most important numbers that you want to look at. This number, the expectancy, tells you how much money you can make on the series of trades. Right now, I have a negative expectancy of $25. So once these numbers go into the green, you'll see that I have a money making system. So I'm going to end this video on that note. Again, shoot me your questions. Again, I'm not, advising anyone to buy or sell or do anything. I'm just sharing with you what this whole trading thing is about and what I do in my own account. So you're going to see losses, you're going to see wins, you're going to see tremendous gains. You're going to see what the whole nature of this trading is about. You're going to see more trades from week to week because we're going out of earnings. A lot of the heavy hitters have already reported earnings. So the contracts are least expensive. So you'll see a little bit more trades. So just stay tuned and thanks for listening.